Hello and welcome to Property Matters here on Dublin South FM. You can contact the show on Twitter, Facebook or LinkedIn at iPropertyRadio, or indeed email the show at hello@iPropertyRadio.com. Your host for today is myself, Carol Tallon, and I'm delighted to be joined by Sean Murphy, founder and personal loan advisor at Simpler.ie. Sean, thank you for joining us today.
Yeah, thanks for having me.
Sean, Simpler.ie. What is Simpler.ie?
Yeah, so we're an online mortgage broker. So we set up back in September 2018. So we've been around for a while. So basically, we're an online mortgage application process, kind of aimed towards kind of first-time buyers. So the idea is that we've created a kind of a nice kind of online mortgage application that you can use, on your phone, on the website, whatever. And then we follow that up with a good service and independent, honest mortgage advice. I mean, that's basically it.
Okay, well, obviously on the show here, we're huge advocates of automating all parts of the property process, including mortgage and conveyancing. But in terms of mortgage applications, because there's just so much paperwork involved, how have consumers, how have they embraced online applications?
We done a ton of work on this maybe 2 years ago. We kind of had a look at kind of the paper applications that the bank were kind of sending out to everyone, and we kind of spent a lot of time, we got kind of people with copyright experience to kind of look at it and kind of put that into kind of more personable language and just kind of talk to them like a person. I mean, when you're online, it's a different environment. If I walk into a bank, I'm kind of expecting kind of a formal, application process, whereas I'm talking to someone online, what's your name? What are you doing? How much do you want to borrow? That type of stuff. It's just the phrasing of the questions. It's different. So we do quite well. I mean, a lot of people who start their applications, I think it was, we'd like excellent stats on people starting and then finishing a mortgage application. And once you've done that part, I mean, it's just getting on the phone to them or getting on email and just following on from there, I guess. But
Do you think trust, I can remember we were having these kind of conversations maybe 10 years ago as to what could go online and what couldn't. And trust is such a huge thing online. It's one of the most difficult things when you're building out a digital offering, particularly one around something that's important as giving all of your information and your private data, everything about your financial situation. Trust is such a huge element. In terms of your communications and marketing out to consumers, how are you instilling that trust? And I know the internet has moved on, obviously, over the past decade, but trust is still an important feature.
Yeah, I remember, I think it was the first weekend we launched, we had about 5 different emails just coming in saying kind of, is this a scam? And we've done a few things. I mean, we added like chatbots to the website. We put a few of the bank logos. We have agency with up there. And I don't know what changed, but I don't think we got a single person asking if we were a scam after that. But it's obviously more than that. I suppose what we've kind of changed, we've been at this for a while now. We've been doing it for almost 3 years. So we've gotten pretty good at it. And so I suppose the key thing is we kind of like to use the phone more than we did at the start. So generally, you kind of, obviously with their permission, give them a call once they put in their application, kind of introduce yourself, chat, and basically try and give a good impression as you can in 15 minutes. Connect with them on LinkedIn. Just let them know you're a real person and you exist. I mean, is the challenge really? But people are buying into it because, I mean, everyone's online now because of COVID. So it's how it's going to work.
Yeah, it's been an interesting year or 11 months. I mean, are you noticing anything in terms of trends? And by that I mean, we've seen in the UK and Ireland that house hunting applications, people viewing properties online, maybe outside of their own areas, there's definitely increasing demand, and I'm not sure if that demand is necessarily going to translate into the market, or is it a case that people have more time to indulge in something that has always been a bit of a national pastime, that is, looking at property. I mean, how are your applications faring compared to this time last year?
We've got a lot of people with mortgage approval who are kind of desperately trying to find a house is the major trend. So loads of people with approvals, and there's just not enough properties out there for them. And the ones that are out there, you have to do a virtual viewing to see them. And there's just all, or they're not built yet because construction's stalled. So it's tough at the minute. There's a lot of people who really, really want to buy. They're in situations they don't like, and they just can't find something to buy.
Okay, I think that's an interesting one, Sean, because we hear anecdotally, like we know that mortgage loan approvals are at historically high rates, and that's not translating into the mortgage or into the marketplace yet. And right, one conclusion we can draw from that is that people aren't able to find the right property. But I mean, is that necessarily the case? Like, or have we a situation where people are getting loan approval and maybe not being as serious about looking to find a property, or maybe not being as committed, or worst of all, not being realistic about what's achievable within their area? And could that explain part of this mismatch as well, rather than it simply being that there's not enough properties available?
I think that's always been the case. I think there's always been people who've applied for mortgages and they're not super serious or ready to go. But I like, if you're sitting at home and you've nothing to do, I mean, most people don't really find filling out a mortgage application a nice pastime. Even with a beautiful application process like ours, I mean, there's a lot of paperwork, a lot of things you don't really want to do. So yeah, there is a bit of that, and there's a bit of people who have kind of unrealistic expectations. But I mean, the thing that's pushing them back is, I would say there's just lack of supply, and supply that is there can tend to be expensive. Because the other thing, people who have second properties and stuff like that, they're not or people who are not first-time buyers, movers. I mean, if you're trying to buy a property and you're already in a property, finding one place and selling the place you're in, that's a task at the minute. It's very hard to the whole process is kind of slowed down from like the bank side of things. The bankers aren't as fast. You have to instruct the valuation. The valuers technically aren't out valuing stuff at the minute. I mean, solicitors are slow, brokers are slow. The whole supply chain is just slow. I had someone the other day who's had a problem with getting their life insurance. So a letter had to be sent to the doctor. Do you think the doctor is fast right now? I mean, it's the whole thing is slowed down.
Yeah, no, it's interesting to take a look at, because look, you're absolutely right. Supply, we have a problem with supply, and new homes aren't coming to the market as quick as we would like, and obviously that's likely to be even further impacted this year, with ongoing COVID-19, if not necessarily shutdown, then certainly restrictions. But actually, what we're seeing when we speak to agents is that the sellers or potential sellers of secondhand property seem to be quite slow to put their property on the market. And it occurs to me that they're part of the cohort that you've just described there, that the people who would be buyers and might have their mortgages in place, but feel that maybe this isn't the time to put their existing home on the market. Is that, do you get any of that kind of information? Do you get that kind of depth of information from your applicants?
Sometimes, yeah. But I mean, I was talking to an auctioneer earlier in the week, and one of her clients was talking about kind of selling their investment property, and she kind of said, if you sell this investment property, you could be without rental income for the next 6 months while I sell that, because you have to get the tenants out of the place. So there's definitely a big knock-on effect from all this type.
And actually, I'm going to ask something that's perhaps a bit of an unfair question, as it would be unfair to anybody dealing with mortgages in Ireland. But because the reporting, particularly since the new year, is really highlighting Ireland's mortgage interest rates as compared with that right across Europe, and we are consistently the highest. And I know this is a very unfair question to ask, but I mean, what is happening at the moment that is keeping those mortgage rates consistently high? And are consumers starting to ask the question as to why in Ireland we're paying so much more compared to any other European country?
This is one of those things that often amazes people. So I would deal with first-time buyers almost primarily, and their concern, they're not hugely rate sensitive is what I would say. Their first concern is kind of getting in and getting the mortgage and just they want peace of mind. They want to get into the house. Now, obviously, it's our job to get them the best rates and the best deals. But it's not something that would deter someone from buying a house. Now, in terms of like the rates available at the minute, there seems to be some pressure forcing them down. I mean, it's not likely to happen fast. I mean, Avant came into the market last year, obviously with a rate to kind of undercut everyone else. So they seem willing to move the rates down, but it doesn't seem like it's something that's going to happen overnight, unfortunately.
That's really worrying to hear that first-time buyers aren't rate sensitive, and unfortunately, I think this is just so symptomatic that of our marketplace here in Ireland, that we've come to expect affordability issues. We've come to expect that things are going to be overpriced in terms of the property transaction. It's really worrying, actually. I think it speaks to the financial education, the real world financial education. And I say this as somebody who was on the wrong side of that. It's really worrying that people aren't so rate sensitive, particularly with the introduction of Avant into the marketplace. Has that created a shift? Because it's created an awful stir media wise, but in real terms across consumers, has it created much?
I'm rarely asked about Avant. I actually don't have agency with Avant yet, but I've maybe been asked 2 or 3 times. I mean, it's not something. It's still kind of a high end kind of a product. There's restrictions in there on LTVs and stuff like that. I mean, I don't think they do 90% LTVs. I could be wrong. But no, it's not something I kind of. It certainly hasn't deterred me or my ability to get clients not having an issue with them.
Okay. Your service, is that nationwide?
Yeah.
Okay, so are you able to give us any kind of insight into trends that you're seeing on a regional basis?
Not really, no. I suppose one thing you're kind of seeing more of is, I suppose we have the working from home thing, obviously. So everyone's able to work from home, and it's great, but it doesn't mean you can get a mortgage. If you're working in Dublin, it doesn't mean you can get a mortgage working in mortgage in Clare or whatever. But there is still people moving out of the city, I suppose, or every city, I guess.
Are you actually seeing that? Because we've spoken a lot about this, and we did a whole show dedicated to remote work where we looked at the trends and tried to see, because it's still early days. People are talking about moving outside. They might be there temporarily at the moment, and they're saying, "Hey, this works. We might do this permanently." But are you starting to see this in the mortgage applications?
It's a bit of a myth, the idea that you can just live everywhere. I think what's happening mostly is that you're having people, like, for example, I've a client she's from Monaghan originally, and she's working in Dublin, and her employer has basically said, right, after COVID, you're only going to have to come in 3 days a week into the office. So she's kind of saying, okay, I'll make that drive for an hour and a half, 3 days a week. I can do that. If I go to a bank and I can say, look, this person is working remotely from Dublin, but they want to buy in Kerry, the bank will say, well, their employer explicitly needs to say, after COVID, they're remote forever. And a lot of employers are not willing to say that because they haven't worked it out themselves. Obviously, it's still a new thing. But I think it's mostly people taking the initiative themselves, saying, look, I only have to go to the office 3 days a week. So I'm willing to move a bit further out than I normally would. I think that's what's really happened more than anything else.
Okay, that's a really interesting one. I haven't come across that before. And actually, it's something that hadn't even crossed my mind before, that somebody whose employment whose employment technically is in Dublin, but if they're being given the option to remote work, even part-time, that, okay, we know that those people are looking in more rural areas and they're willing to do the commute. I suppose I hadn't followed that thought fully through to the logical conclusion of actually the banks wanting to be sure that the employment is sustainable remotely, albeit part of the time. So what does an applicant have to provide? Is it a letter from their employer stating a willingness to allow remote work?
Yeah, that's exactly it. And that was in place before COVID. If you could get the employer to, explicitly state this is what's happening, then yeah, banks were okay with that.
Okay, that's an interesting. And say from the start of the new year, and I appreciate we're only just at the start of February now, but what kind of trends are you seeing? Because obviously last September we might have been more hopeful as to where we would be, in spring of 2021. Now that we're here, it's looking, increasingly less hopeful. What kind of trends are you seeing from your buyers at the moment? Their plans for 2021?
At the minute, I suppose I'm just seeing people kind of stretching themselves as far as they can, kind of financially wise. So I've got a lot of people coming in trying to get exceptions, trying to use their bonuses as incomes, trying to use their, if they're Googlers, they're trying to use their equity grant as income. I mean, everyone's just trying to increase the amount of income they can use to buy a house. That's kind of what I've been seeing for the month of January. Now, whether that's the case of everyone knows there's a few exceptions available in January and they're kind of flooding to me now, but it just seems that everyone seems to be trying to squeeze every last penny out of their mortgage application at the minute.
And how are banks responding to that?
If you can put together a solid case, then it's fine. I mean, they're giving exceptions where they would normally give exceptions. There hasn't really been a huge change in kind of the lending criteria. They maybe have got a bit stricter, but if it's a good case, typically it's a good case. But yeah, they're probably a bit stricter, but they're still doing things.
Okay, is it a good time for people who might be considering buying a property this year, but maybe think that it's not a good time because they're reading about low levels of supply? Is this a good time for first-time buyers, particularly, to be making this application?
Well, I suppose the approval lasts for 6 months. The big worry for a lot of these people is that they'll apply for a mortgage and they'll get rejected for just some reason. They don't know. They've never done it before. They're first-time buyers. The trick is in the name. They don't really know what they're doing most of the time, which is fine. That's why we exist. So yeah, it probably is worth having a go. I mean, if you're trying to try and buy something in the next 6 months, yeah, why not? If you're not going to do that, I would make sure that you're ordering stuff from the central credit register, making sure that you've no things on the credit report that you don't know about, and just make sure you're saving enough each month to be able to support a mortgage payment or paying rent that would cover a mortgage payment.
Okay, that's good. That's good advice to end on. So tips for people even thinking of getting prepared: get your credit bureau report. Make sure the savings.
Not the credit bureau. Get the other one, the central credit register. It has more on it, and it's the one everyone's using, and there's stuff on it that's not on the ICB that's catching people out. So it's a big.
Oh, excellent! Thing. What's the resource website for that one?
It's the Central Credit Register. I think it's ccr.ie. The Central Credit Register. Google it, you'll find it.
Very good. That's great. That was Sean Murphy, personal loan advisor at Simpler.ie. Thank you for being with us today, Sean. We need to take a quick break. Stay tuned.